Hi everyone! In today's Tech News Spotlight, we'll discuss the delay of Ant's IPO and take a look at how this impacts Asia's fintech ecosystem. My name is Angeline and this is the Daily Watch. Chinese fintech giant Ant Group was expected to make its trading debut in Hong Kong and Shanghai last Thursday at a valuation of roughly $310 billion in the world's largest ever IPO. The debut would have made the company more valuable than each of China's four major state-owned banks, according to Fortune's 2020 Global 500 ranking. Just 2 days before the planned listing, regulators in Shanghai pulled the plug, at least temporarily. The Shanghai Exchange told Ant in a notice that changes in financial technology regulatory requirements and other major issues meant the company didn't meet the requirements needed to list on its exchange. The news sent shockwaves through the financial world and came as a surprise to Ant. General investors may have to wait up to 6 months to own a piece of Ant Group and could also see a reduced valuation as investor anxiety about what regulatory scrutiny the company may be exposed to is digested by investors. Ant's record-breaking IPO would have led the way for future Asian fintech public listings and would have been a huge achievement for China's technology sector. However, the regulatory scrutiny the firm is facing may have ripple effects throughout the fintech realm and well beyond whether they will or can list on public exchanges. One of the company's biggest foreign investors predicted the episode could do lasting damage to confidence in China's capital markets. It may also have spillover effects on Hong Kong, whose status as a premier financial hub has already come under question amid increased meddling from Beijing. Liu, the chief investment officer for Rail Singapore, thinks that Ant Group's IPO suspension could represent a rising global trend of increasing regulatory scrutiny of fintech companies. Liu said that as a result of this trend, investors may begin to reevaluate the valuations of tech firms. Winston Ma, adjunct professor of law at New York University, expects that the increased scrutiny of internet lending is just the beginning, as more regulations such as the antitrust and the personal data privacy protection are also coming to the picture. He believes that the age of exponential growth in the wilderness for internet finance is over, and that's the reality the fintech investors have to embrace. As for Ant itself, it's unlikely that the IPO suspension will deal a fatal blow. The company had 71 billion yuan of cash and equivalents as of June and is one of China's most systematically important institutions. The more pertinent risk for Ant is a decline in its breakneck pace of growth and lofty valuation. China's new regulations will force the company to act more like a traditional lender and less like an asset-light provider of technology services to the financial industry. That will almost certainly mean a lower price-earnings ratio for the stock if it eventually lists. That's it for today. If you liked today's video or learned anything new, press the like button, subscribe and ring the bell to get the latest news from the Daily Watch. See you next time.